Hello and welcome to the midweek edition of the Sharesify podcast. As usual, James and Steve are here. How are you guys?
Yeah, good evening.
Alrighty.
And yet again, markets seem remarkably resilient given all the sort of macro headwinds. We've got crude oil back at $90, Brent crude's over $90, in fact. And if you think at the start of July, prediction markets were talking about the Strait of Hormuz being fully open by the end of this month. And so, you'd be back to 80 transits a day.
Yeah.
I think the maximum it got to is 25, and we're almost back to zero. So, Steve, what's going on? What do you think is
Well, I mean,
keeping
everyone's
markets
aware
up?
that, we look like we were lurching towards some kind of agreement, and that's all gone pear-shaped. So there's all this issue with oil, Straits of Hormuz equals inflation. That's the big question. How much will
Mm,
it add to living costs? And of course, we're inching towards the end of the summer. It won't be long before we start looking to the heating season in the US, in Europe. No one really knows what's going to happen, what's in Donald Trump's mind. What we do know is investors still in their very capricious mood. And we've seen a big rally back in big memory chip stocks, in chip
yeah,
stocks in general, where they were perceived to have been beaten down over the last sort of or multiple sessions. And I think investors have come back in saying, actually, I think there's some discount opportunities here. And so we've seen some big jumps in AMD, SanDisk, Micron Technology, for example. And we've got obviously the start of really big tech earnings season to come as well.
yeah. I mean, also though in the UK, I do the morning kind of roundup very early, so it's 7:15ish, and I'm getting a lot more kind of up arrows, a lot more positive reports coming out. To me, it seems at least a negative. Yeah, we had a couple of warnings today, but on the whole, I mean, this week, this month, it's been pretty good. James, you picked up a few, haven't you?
Yeah, I've been a bit of a roving reporter this week, haven't I? And stepping outside of my patch somewhat, but
Yeah.
lots of upgrades from the kind of construction, engineering, and services sector. So we had Kier over 90% of its FY27 revenues already in the bag, upgraded guidance, and Rosebank. This is the kind of the buy, improve, sell model that was worked so well with Melrose. An upgrade there, and that's really been driven by the MW components business. And another one this morning, a spectacular performer, is Hardide, and this is a kind of advanced materials stock.
Yeah.
Shares are up 1,000% in 1 year. They've doubled the revenues ahead of target, and they've set out a plan to double it again in the next 2 to 3 years. So very interested in that particular part of the market.
I think it's worth
It,
pointing out to our listeners that it's all very well the management's speaking a good game and showing higher profits than last year, but it's all about the expectations. So it can be
mm,
sounds really rosy on the front end, and look, our results are going in the right direction. But if the market already predicted that was going to be the case, then what else are they saying to give the shares a further push upwards? So it's always worth bearing in mind what does the market expect versus what the company actually produces. That's the best benchmark, and that's um, the real driver of direction of share prices, not really about just the headline figures.
yeah. The other thing I would point out is that, we all know the UK market's cheap, and we had yet another takeover today, this week with Mitie being taken over by OCS. Now, they're both in facilities management, so it's another case of an insider, an industry insider, knowing the value of the business, putting the two together to make a much stronger offering to customers, existing and new customers. They're paying 3.1 billion in cash. That's 221p a share. I mean, that Mighty shares never traded at 220p, so it's a great deal for investors as well. And we've got more rumblings in the real estate space, haven't we, James? We mentioned it before, AEWU saying that they'd be interested in AIRE. We've had Prologis come back today to say that they're making a final and best offer, £10.32 for SEGRO. Now this is huge. It's valuing SEGRO at £14 billion. And interestingly, for me at least, I looked at the valuation and they started off around £9, and I put a piece out and I said, make it about £10.25, and I think there's a conversation to be had. This offers £10.31, so I'd be very interested to see
Well, are you
what
that fly on the
management
wall
come
then,
back
Ian?
with. Oh no, I'd love to think Prologis are,
You're
reading my
sending
stuff.
your messaging, were you?
I'm sure they're not, but
I mean, it does draw out an interesting point, though, is to what extent, I mean, REITs are in particular, they've been beaten up for a long time. And,
yeah,
investors have a long history in this country in particular of celebrating takeovers. But if they're being taken out on the relative cheap, that is not necessarily a good thing long term. And are we taking out really good quality companies that, in 5 years' time might be worth considerably more than this buyout price? So, this is always something that investors have to weigh up on their own
yeah,
merits.
yeah. I mean, as I say, I think £10.31 is good. It's a 14% premium to the latest NAV at the end of June. I look at cash flow and earnings, and on my model, I mean, earnings have been incredibly predictable for this business. Honestly, there's almost no variation in the trend. 6% a year, year after year after year. It's a straight line. And so, I think that's the predictability of these earnings and cash flows is basically what Prologis like, and they're prepared to pay a fair price. And I think £10.30 is a fair price. Very interested to see what management come up with. But you've got your eye on a couple of big names tonight, Steve.
Yeah, I mean, it's as I mentioned earlier, we've got a real thrust of big tech earnings overnight.
Mm,
Alphabet, we've got Intel. No, Intel's tomorrow, I think. There's a whole range of big tech earnings this evening, and Alphabet is really worth focusing on because it's
yeah,
all about frozen chips. So ultimately, they've developed this new idea of freezing effectively low temperature chips because it makes them much more efficient. Now, this is old physics, right? Ultimately, the more you bring down the temperature, the calmer the atoms become, and so the easier it is to pass an electrical current through any kind of collection of atoms. So this is not new news. It makes copper, for example. We've been freezing copper with liquid nitrogen, liquid helium for years and years and years for superconductivity, easy for me to say. So anyway, interesting development there. We'll see whether or not that actually grabs more market attention, because the market doesn't seem to really sort of jumped on this, and it might simply be it's not really a game changer. It's a kind of an addendum to the wider market. But we'll obviously be looking at trends in internet land, advertising rates, and of course Google Cloud. That's going to be the big driver really of
yeah,
surprise up or down. Is what's Google Cloud doing, and relative to its capex, because we know it's spending an awful lot of money on driving AI capacity, but it is increasingly being seen by fund managers I read and talk to as the better placed of the old Mag 7. And I'm not sure Mag 7 is terribly instructive anymore. We should probably find a new acronym.
yeah, yeah. No, I agree with you. I've been hearing this on Bloomberg. People saying Mag 7 doesn't exist anymore. James, you got a few names on the horizon as well.
Yeah, we have another busy one tomorrow. So we've got the Works and Naked Wines results. We've got Motorpoint AGM, so we'll see what they say about the state of the car market, and Cranswick Q1 on Monday. And also MyGo Investment Trust is reporting on Friday. So now another busy end to the week.
Yeah, yeah, yeah. I'm going to keep my eye out for. So we talked about these really interesting small and mid-cap UK engineering and specialist technology firms. Discover IE is out tomorrow. You wrote that up in your Magic Mid-Caps note this month.
Correct. Yep.
And we've got some comments there from Fraser McCursey at Unicorn. He likes it. Custom electronics maker. Lots of these really interesting companies out there. So you mentioned Hardide. I looked at IQE this week, photonics. Wow, that is a hot space. That really is where the Gooch and Housego do
Yeah.
photonics. That's been taken out. Halma's photonics business is what's driving this above average, revenue
There's
and
there,
cash flow growth for them.
there's certainly a lot more drive in. I mean, photonics is effectively using light as a way of transferring
Yeah,
data rather than
yeah,
using
yeah, yeah.
copper cables, etc. I think with IQE, it forms a part of their business, and it might be the most exciting part of their business. But of course, their big revenue generator over years has been compound semiconductor wafers,
Yeah, yeah,
and
yeah.
using those kind of substrates, and it never really quite captured the market share it kind of seemed to have the capacity to do. So maybe photonics is going to be its new future.
Yeah, yeah, yeah. And before we go, we've got news. We've got a new podcast, haven't we, tomorrow, James?
Yeah, looking forward to that, Ian. So we've got Guy Anderson coming on from Mercantile Investment Trust. This is kind of mid and small cap focus, so we'll be really eager to
Perfect.
hear what Guy has to say about valuations in that part of the market, where he's positioned the portfolio. So listeners and viewers, make sure you tune in. That's going to be a really good one.